Good afternoon. This is Ken at Tortoise Capital. I'm going to redo the uh, daily lunchtime review and reset, only this time instead of using the full RLCO Bollinger Band background, we're going to use the visual box trading minimalist set. And I really just want to look at the opportunities and the actual trades through the lens that we were using to manage the trades with. So here's Alcoa. Opportunity miss. So black boxes are opportunity miss. I'm not going to beat myself up twice on that. It hurt too much the first time. So the long scratch. So I had originally set up a 50-cent standard execution risk box, but because of the triple bottom, I even started that at only 30 cents. That was the stop and reverse, and cashed, and then um, and then stopped and reverse again, two scoops and long. So I'm missing that box, but there was actually this was the stop and reverse, and that made that DIA sequence really good. The scratch in Devon, poorly managed, span of control issue. This was a long and then a scratch in Mexico, poorly managed. Never really got moving. Long tried the second one, ended up just taking a fractional gain, but we were poised on a melt up to be really good in Brazil. So still like that trade. Three opportunities missed in Latin America. Intel missed opportunity. Was very active in the Russell, so two scoops short, covered. Um, Tried a long micro scratch, two scoops short and scratch, stop and reverse, two scoops long, and nice exit. This was the original decision box, refined to this box, got short, um, covered for a micro win, long covered for a micro win. So that was pretty well done. Got what we could out of it. Just missed the opportunity in IWR, missed JPM. Oops. Lily, so this one was set up as a rejection of the zero line, um, manageable risk box, short, smooth cover as it came back to the zero line. I was thinking hard here, but it felt manageable, and so that's a good trade. Oh, I should stop right now and beat myself up for missing the 3M meltdown while I'm talking. Darn it. Merck missed after the scratch. Microsoft. So one of the things you just notice is if we look at PQ, was it Proctor? One of these had a box. Yeah. So we're trying to figure out what the size of that in visual box trading, what the size of the manageable risk box is. So you find some sideways and obviously sideways channel, make that your box, set that equal to zero point 0.2, multiply that by 5 to get your position sizing risk. Then your initial move out is only on a zero point 0.2 or not. You get to no lose plus dinner for 2 quick, then manage the trade. See how that works. That's us estimating the size of the Raytheon box. Schlumberger missed twice. This on the previous, we were looking at these support levels. The first one was the 200 period moving average was right there, and then it rose up to meet the VWAP, and the 200 were together, and then the price came back to the 200 once again. So just think of those as lily pads and support levels coming back. This was that sweet trade in Simon Property Group, long, then immediately lost, and then stop and reverse, and then a nice long slide. That was good. Just want to point out this was nice because after Winter, then spring was rejected. Spring was rejected again. Then spring, but a rising low. And then this exit as it comes out of the Red River, coming to the zero line. That's made that a really nice exit. Very satisfied with that one. Treasury opportunities. So this was the long United Health. I missed the. I gotta put that markup in there. That was the exit was on the return to the zero line. I felt like it was done, and it was. So good trade with the hybrid frog right from the get-go. Missed the oil collapse. This was that VXX melt up. Nicely done. Let me expand the scale just a little bit. So the point I want to make on this one is, oh, I can't see that. Well, there's a fourth possible entry just north of this, and so we were postured to have a really big melt up. Didn't get it, and then when this summer rolled over into fall, you've really got to get out of VXX. You know, get it while it's running up, and then as soon as it starts exhaling, just clap your hands and get out. But that was a nice trade. Verizon, when it moves, it moves. When it doesn't, it's darn near invisible. So that gives you a sense of the size of the manageable risk box while you're waiting for breakouts. And notice the final breakout into spring. Spring goes into summer. Nice move. This was at Wheaton Precious Metals. Long, that's the one I missed, even though it got. So we have summer into fall, and then it resumes the summer. That makes this a really good entry. Fall into summer resumes. That's the one I missed. Go summer, fall into the summer again. That's the one I got. And then this one came all the way down, was coming to the zero line, so I got out. Missed the reentry, missed the reentry. Took this reentry after it dipped below zero and came back up, and then took this little cash. That felt good. Win, it was two, like a hybrid frog, and then a reentry, so that's pretty good. Two scoops short and U.S. Steel, then a long scratch. XLB, that slow sliding meltdown. Notice when it crosses the zero line, why you want to be short right about there. That's where you want to be short. I showed as green, but that's about where you want to be short. Okay. Opportunities in XLF, very orderly. Difference between sideways quiet channel and then a directional breakout beginning in XLK. Metals and mining, hybrid frog short, and then covered. And again, I should have covered this one back over in here. And then the relief that I got to actually get something back made me miss that one. I made me miss that one. Okay. So different view when you're using the Spartan-like screen of the visual trading box. Visual box trading, I should say. Next up is the swing review.